Welcome back to Fast Market here on the Schwab Network. It's time for our cash tag segment. For that, let's bring in Landon Swan. He's a co-founder at Likefolio. Welcome back to the show, Landon.
Thank you. Great to be here.
All right. So Dave & Buster's, we typically don't cover this stock with you guys, but I kind of wanted to just because the stock's on a nice tear here at nearly 5-year highs or just over 5-year highs. What kind of data do you guys have on this company? Is it supportive of this massive gain that we've seen over the last 12 months?
Well, it kind of depends if you look at the company as a whole or if you break it down into their components, because you've got Dave & Buster's, you got Main Event, and between the two of them, Dave & Buster's is actually doing a lot better. I would have guessed the other way just based on my buying preferences. But Dave & Buster's is actually, if you look at the web visits, it's up about 10% on a year-over-year basis. Main Event down 9%. So, they're kind of going in opposite directions, and they own them both. But you can also see how they're doing against competition. They're beating the competition. Web visits here, you can see it's as a group overall, the company's up, I think, about 4% on a year-over-year basis. So, kind of where they should be, outperforming slightly. Mentions, though, are weak. They're about off 19%. Happiness is down about 7 points, down to 75. So, there's a little bit of good and a little bit of bad here with this stock. So when you look at a company that's trading where they're at, they're up, nearly double in the last year. I mean, you can see this run. It's been really big. You got to have really high expectations as an investor. And so while they have, they've justified some of this move, I think that the bar is getting just a little bit too high. I will say that a lot of their innovations that they're coming out with are good. I mean, they're looking at adjusting their game prices. They're looking at, changing the menu around so they can get more revenue per customer and have lower costs. They're remodeling a lot of stores. But some of the consumer data that we're seeing is just a little bit iffy. A lot of those changes haven't fully got in yet. So, there's optimism from investors that much of that will make big changes and make, big improvement for the company. But I just I can't, based on the data that I see, justify all-time highs right now. Or I'm sorry, where they're at right now. It's a little strong. And you can see that chart here that I'm talking about, Dave & Buster's and Main Event, the top and bottom ones owned by the same company. And then, we're throwing in Topgolf and Chuck E. Cheese as kind of experience plays. They're very similar. Dave & Buster's very, very similar to Chuck E. Cheese, and they're doing much better. Main Event is, it's not exactly the same as Topgolf, but they're falling behind. There's kind of a movies and other thing, video games, things like that. So some brand doing well, another not so well. But overall, I don't think that their price is justified based on what we're seeing, even though they've got some innovations in the pipeline that are coming. Maybe that'll turn things around, but so far, if you're buying here, you're really betting on perfect execution, which, anything can go wrong. So I'd rather not be in on this one at these prices.
Landon, during COVID, this almost had a cruise line problem, right? You couldn't go there. You couldn't go anywhere near the place. Now, this company has a 90% brand recognition. There's the 5-year chart. You see the COVID drop off there. And now it's basically making its way all the way back. It's got a 90% brand recognition among consumers. How about this? They make 34% of their money with food and beverage, 66% on the entertainment part of their business, and their clientele, 53% male, 47% women. That's the one that surprises me. 47% of their clientele is women. But is this, Landon, here's my question to you, based on your data and the chart that we just showed, is there a cruise line comparison here? Is this company just more of a long-term digging itself out? They've got new management, kind of a new strategy coming out. But boy, Landon, food and beverage, watching sports, playing games, and don't forget these private events that they do so well on.
Yeah, they do. I mean, it's a fun place to go. Both of their brands, fun places to go. I pause at the cruise line comparison because I think there's real pent-up demand when you talk about the COVID shutdown and not being able to go on cruises. That's much stronger than going to Dave & Buster's or Main Event. That pent-up demand, but I love the fact that they were able to survive that. That was a nasty, nasty time for this company. I mean, basically, the government says you're not allowed to be in business. That's just not great. For a guy like me, I don't like the government saying that. So I'm very thankful that they were able to get through this, and they've recovered significantly. The stat on the male-female breakdown doesn't surprise me too much, because I think that it's a great place to take kids, and so father or mother can just go there and just take the kids and have a great time. And you spend $200 in gaming to get you tickets to buy a $2 stuffed animal at the end. So they've got a pretty good model that they're utilizing there, and I'm not surprised that that the revenue comes primarily from entertainment. So I don't think that the cruise line comparison is completely accurate, but there's definitely was a lot of pent up demand. I think that was kind of just the world in general. People wanted to go out. They wanted to go to the movies. They wanted to go to Dave & Buster's, places like that, restaurants, you name it. But I think that we've kind of, gotten all those opportunities back now. So really, it's just a matter of good operation, executing really well, and having innovations like these remodels and these technological updates using iPads at those tables, things like that just bring the experience up to the level that it needs to be. If they can continue to do that, then I think this price can be justified. But there's a lot of execution risk here with the stock where it is right now, and so the stats that we have show that they're doing okay, not great. And with the stock price as high as it is, it just, I'm tapping the brakes just a little bit on it.
Yeah, I'm looking at the mentions count, up 20% year over year, but the stock's far above it now at this point. Landon, when you look at comparables here, you've got that other chart with, the Topgolf, Chuck E. Cheese main event. Is this one of those things where they've got a lot of debt on their balance sheet? That's a problem. Interest rates are rising. That's a problem. But at the same time, as long as they continue to expand their footprint because their margins are so good, is that maybe better for the long-term look of this? And then maybe shorter term, you guys are maybe a little bit more bearish just due to the fact of the run that it's had?
Yeah, I think you kind of nail it there. I mean, they do definitely have an opportunity when it comes to footprint. The more that they expand, obviously these stores are money makers, and so the more that they can get out there, the better they're going to do. And they've got a very recognizable brand, as Kevin points out. I mean, this is, people know what this is, and they go there to have a good time. And a lot of times, I'll tell you, in my household, if you're just not sure what to do, and you got the kids, and let's go to Dave & Buster's or Main Event. Let's have a good time. You're going to go in there and spend a couple $100, and the kids are going to be happy. So it's an easy decision, I think, to make. You just got to get more stores out there. But with the stock where it's at, it's just tough to say, yeah, I think they're going to crush this earnings call. I think that if anything, there's downside risk. So, maybe we get a pullback. And then if you're a long-term investor, that might be a better time to get in. We're not super bearish going into this, but just, again, it's based on price. If this was trading at $50, we'd probably be bullish. But at 65, we're tapping the brakes.
Yeah, I'm wondering what that warm weather we had this winter, the impact, because as a person that had a kid for about 2 or 3 years, we were down at Dave & Buster's through the winter when it was minus 10 degrees in Chicago. You couldn't go and do anything else with your kid. Mild winter, maybe that negatively affects their quarter also. So we'll have to wait and see on that. But great data, as always, Landon. Appreciate it.
Thank you, guys. Take care.
All right, that's Landon Swan, co-founder at Likefolio.